This is Chris with America's Mortgage Professionals. We're going to do a little presentation on VA loans today. We've got a couple here in the building, and I guess we've got a couple online. If anybody has any questions, type them up onto the screen, and we'll try to answer them as we go along. If anybody in the classroom has a question, wave me down. I'll come back, and I want you to speak into the microphone so the people on the other side can hear the question, and maybe we can all learn from this, okay? All right, so here we go. What's the first thing that you should do when you get introduced to a veteran? Anybody know?
Thank you for your service.
Stand up, look them square in the eye, shake their hand, and say, thank you very much for your service. You were right on it. You're going to get an apple today. Exactly. All right. Next slide. There's the correct answer. Well, you nailed that, didn't you? No, giddy up, girl. Okay. So one of the reasons that we are doing this presentation today is that there is a huge market in our area and in our state for veterans. Florida ranks number 3, only behind California and Texas as having the most number of veterans. In Broward County, we have 87,000 veterans. In our 3-county area, we have 300,000 veterans. In Broward County, the last time I did a search on Google, there were 31 VA facilities in the county that you could go and solicit, and that did not include the VFWs. Okay, so there's tons of places where you guys can find leads. It's a huge market. There's lots of turnover because over an average 20-year military career, that person might move 10 times. And then they might come back to one of the places that they were previously, so you can get a lot of repeat business out of these folks. They have very stable income. I don't remember ever having anybody in the military ever getting laid off, okay? And most of the time, they're going to have a second career after they get through with their 20. So they're going to have the military income still coming in, plus the money from the secondary career, which makes it very easy for them to afford any type of property. They have more buying power. The reason that they have more buying power is because we can go a higher debt ratio, up to 60%. There's no mortgage insurance, and it's 100% financing, okay? No money down. So, this is my slide from when I did this in Colorado for you guys. But so the numbers for Florida are, like I mentioned earlier, for Florida, we're ranked number 3. We have 300,000 veterans in our immediate area, and we have 31 facilities in our county. This was the information from when I went out to Denver and did this presentation. Turnover. Military families move every 2 to 3 years. 10 moves over a 20-year career is not unusual. A lot of repeat business. Stable income. Active duty service members seldom get laid off. Retirees have stable, guaranteed, inflation-protected income. Okay? More buying power, and they can purchase sooner. One of the things I want to point out to you guys is I've got a son that's a Marine, and when he went into basic training, they really didn't tell him any of his benefits. All they wanted him to do was do push-ups and kill people. That was it, okay? They didn't teach him anything about any of the benefits, what a VA loan is, how easy it was, any of that kind of stuff. So when you run into a veteran, do not assume that they know anything about it, because they probably don't. So you have to be the one that has the knowledge, and then you can educate them. One of the things that I would also recommend, not only listening into this class, but the board also has a military designation class that you can take, and I would highly recommend that you guys go and take that class. I think it's just a one-day deal, maybe an 8-hour class, okay? Should we rent or should we buy? Here's a slide that kind of explains to the veterans the reason why it's a good idea that they should buy rather than rent. This was an actual listing that one of the location agents sent me, and you could either buy this house or you could rent it out, and it's a townhome. It was $200,000, or you could rent it for $1,954 a month. Those were your two options. okay? 4 bedroom, 2 baths, 1 half bath, 1,700 square feet. So if you were going to rent this out, here's what the numbers look like. $1,954 the first month, $1,954 the second month, and you got the security deposit. And if you had a dog, you had to give them $500 for the pet deposit. All right. So the total amount of money needed was $6,362 to rent this house. Okay. The cost over the first year is going to end up being $23,448 when you multiply the $1,954 times 12 months. So here's what it looked like to buy the property. Okay. Now this slide is a little bit old, and these aren't the actual rates anymore. They're actually less than that. Our rates on VA loans are now in the 3% range. Okay. So these numbers are actually going to be better than what I am presenting on this slide. But if you look up here, I had it at 5%, 30-year deal, $200,000. It's 100% financing. And if you look down here, principal interest, $1,096, taxes and insurance, $239, the HOA fee was $300, and the all-in payment was $1,635. Okay? Now that the rate's even better, I'm willing to bet that payment, yeah, it's going to be 15 and change now. All right? And to rent it out, it was how much? $1,954. So this payment is over $300 a month cheaper than the rent.
It's a no-brainer.
It's a no-brainer. Thank you for that. So let's look at how much money you need to buy it versus renting it. So down payment money on a VA loan is $0. Everybody see that? Closing costs estimated at $4,000. Setting up of the escrow is estimated at $4,000 for a total of $8,000. And where I get that number is, and this is my rule of thumb on every deal, anytime anybody calls me, they say, how much are the closing costs? And my rule of thumb is closing costs are 2% of the loan amount. Setting up of the escrow on average is 2% of the loan amount. Now, depending on the time of the year that they buy, that 2% for the escrow setup could be less than that, dramatically less. You know, if they buy right after the taxes are paid and they've got a long time to gather the money back up, then that number is going to be a lot less. Okay. So the cost over the first year, uh-oh, did I screw up? So our cost over the first year, $1,635 times 12 was $1,579. How much that property cost for the first year. And then on the rental, it was how much? $23,500. So is 15 better or 23 better?
I think 15's better.
I think 15's better too.
Give it to me, nothing.
Okay. I like where your head's at. Okay. Upfront expense, buy versus rent. So upfront expense to buy was $8,000 versus $6,300. So this is a little cheaper to rent it. All right. Monthly payment. This is a lot better. It's $319 less. Equity, look at this. All right. $87.14 in equity, whereas you rent, you don't get any equity. That goes to the landlord. And I'm assuming that we're getting 5% appreciation in the first year, which is a low number according to the board stats that come out every month.
That's fair.
Yeah. Increase in your tax refund check, yes, because you're going to get tax advantages for being a homeowner. And after the changes that occurred on the taxes last year, I think it's even a better deal to own versus renting. All right. So how do they come up with the money to buy this thing? So we said that the upfront expense to buy was $8,000 versus $6,300. So we're $1,668 different. Let's say that they had the money to rent it, but they were a little thin. So let's say that they're let's call it $1,700 short. Okay. So the average tax refund check last year was $2,763. What are we in right now?
Tax season.
We're in tax season, right? Soon as January 30th hits, February 1st, everybody's filing those taxes and getting those refund checks, right? So right now is the best time for you to attack renters, to convert them into buying, okay? Because they're going to get that tax refund check. So at that point, with that $2,700, now they have more than enough money to make up the shortage. They actually have a surplus of money of $1,095. But let's say that they didn't get that tax check. Then, do they have any money in their savings account? Do they have any money in a 401k? They can borrow the money out of their 401k and not take a penalty, and they pay the interest back to themselves. Okay? They can get a gift from a family member or friend. They can negotiate seller concessions. And on a VA loan, they're allowed to get 4% back. All right? On the board stats from last month, the average purchase price versus the average contract price, list price versus what it actually sold for, on average, it was a 4.3% discount. Okay? So right off the get-go that the average person out there is discounting their house 4%. You could give that 4% to your veteran, and then they don't have to come up with any money at all, because that'll cover the closing costs and the setting up of the escrow account. You can request a lender credit from us. And let me explain that to you if you don't know what that means. Let's say that the going interest rate now is at 4%. And you got a client that's a little thin on money. I can go to the underwriter and say, okay, I want to kick this guy back 1% of the loan amount to help him with the closing cost. So they'll do a calculation, they'll come back and they'll say, okay, instead of him getting 4%, his new rate's going to be 4.25, but we're going to kick him to 1%. Or if, let's say he needed 2%, they'll jack the rate up to 4.5, and then he can get the 2%. Okay? How do you market to veterans? Good question. Did you come up with this question? That's what I thought. All the good questions go to Tommy. Joseph, good to see you, buddy. All right, so here we go. We want to build a sphere of influence. 35. Oh, this is my Denver slide. It says there's 35 veteran organizations in Denver. In our area, there's 31 plus the VFWs. So you've got tons of places to go and solicit people. You can drop little postcards off, put them in their windshield. You go to the VFW, offer to buy a couple of rounds of drinks for the vets, hand out your business cards. It's pretty simple. It's just going to cause you to do a little bit of work. All right. Get involved in the Chamber of Commerce. Most Chamber of Commerces have a military committee that does stuff for the vets in the area. I recently joined Homes for Heroes. Okay. So that's another avenue for you guys to look at. Do real estate seminars for buyers and sellers. Ask for referrals and testimonials. Most of you probably have your own individual website. You can add a tab for military buyers. I would recommend that you do that. Put a little flag on there, put a couple ribbons, and explain the basics of the VA loan. And if anybody needs a copy of this presentation, I can email it to you in the morning. Just email me and then I'll send it to you. Let's see. Showcase your professional designation, the Military Relocation Pro. Like I mentioned earlier, you can go to the board and sign up for their class that will give you that designation. And you can brag on your Facebook that you are a military specialist, okay? Provide answers to military buyers with an FAQ section on your website, on your Facebook, in your marketing material. You can volunteer at a VA hospital. All right, that's another way to get in. You can offer a link to your favorite mortgage lender who does VA loans. That's me. Just in case you guys forgot.
Yeah.
There are several. The question was, is there any VA hospitals in the area? And the answer is yes. Google it. Come on, work. Oh, you got it? Okay. Oh, don't ever. I was in the zone there. Did you feel the rhythm I had going? Okay, you did have the good question. Okay, so VA financing. Here's some quick hits. Now, obviously, I've loaded up the one for Denver, but the numbers are very similar. So, no down payment up to the county limit. In Denver, it was $561. In our area here in Broward, it's $510,000 and some change. So they can go up to $510 with no money down, no mortgage insurance, with a credit score as low as 580. So if they have one of these, Joe, what is this? A pulse. If they have a pulse, we can get them approved. Okay? We'll actually go up to $2 million on a VA loan. Now, anything over the county limit, the veteran has to put down 25 cents on every dollar over the county limit. So our limit's $510. If they get a house for $610, that means they went over by $100,000. They'd have to put $25,000 down. But there's still no mortgage insurance. Okay? We'll go up to 60% on the debt ratio. All of my competition cuts it off on 45 across the board on all their loan products. We are specific. On our conventional loans, we go to 50. FHA, we go to 56.99. And on the VA loans, we go to 60%. It allows you to get those people that maybe got turned down someplace else approved. And the people that were going to get approved anyway, we're approving them for a higher dollar amount, more purchasing power. No private mortgage insurance, no penalty for early payoff. The loan is assumable by another veteran. Let me explain to you what assumption means. So you've got, I'll give you a good example. Right now, let's say that the rate on a VA loan, 30-year fixed, is 3.5%. And let's say 5 years from now, the rate goes up to 6.5%. Across the board, the market has just shifted and rates have went up. So this guy decides to put this house up for sale. Somebody else, another veteran, can come in and buy his house and take over his 3.5% interest rate rather than going out and obtaining a new mortgage at the 6.5% deal. So it gives this guy an advantage. Let's say if there's 10 houses for sale in the neighborhood and they're all about the same, right? So if they buy one of the other 9, they have to go out and get new financing at the 6.5 rate, or they buy this guy's house and they can take over his 3.5% interest rate. Question?
But that would only be for...
He would have to get a home equity loan for the difference or have cash. Okay? But that's a great question. Relaxed guidelines again. A veteran can buy a house after 2 years of seasoning on a bankruptcy, 3 years on a foreclosure, so it's very relaxed here. The VA loan is just for their primary residence only. It can't be used to buy an investment property or a vacation home, just primary residences. And they can use their benefits over and over again. So he buys this house, 3 years later, he decides to get a bigger house. He sells that, pays off that VA loan. He can go out and get another VA loan. Okay? VA loans can increase in the amount depending if it's a 2, 3, or a 4 unit. So the more units, the bigger the loan can be without having to put the 25% down. Okay? Plus, we've had a veteran that bought a 4-unit deal. He moved into one of the units, rented the other 3 out. He used the income from the other 3 units to qualify for the loan. They'll give him credit for 75% of whatever the rent is projected to be. So if it's $1,000 a month gross, 75% of that would be $750 times the 3 units, it's $2,250, right? So he got income on his application of $2,250. And it was a 4-unit, $800,000 deal. And he didn't have any debt at all other than the house payment. And he only had to show making $65,000 was all he had to show making in order to qualify at the 60% debt ratio deal. Okay. We go down to a 580 score. They're allowed to get 4% seller concessions. And I already mentioned that if you go over the county limit, they have to put 25% down. All right, determining eligibility, AMP is going to do this for you, but every once in a while people will ask me, you know, who qualifies for a VA loan, right? So if you guys want to take a snapshot of this with your camera, you can, but service members, active duty after 90 days. Active duty, that means they're somewhere fighting somebody, right? World War II, after 90 days. Post-World War II, after 181 days. If they were in the Korean conflict, after 90 days. Post-Korea, 181 days, Vietnam, post-Vietnam. And then there was a period of time where there was no fighting going on. Then they had to be in the military continuously for 24 months. The Gulf War, continuously for 24 months. If they're in the reserves or National Guard, it's 6 years in the reserve, or you had to serve 90 days in Iraq. My son, who's the Marine, is in the Marine reserves, but he spent a year in Iraq, so he qualified because he was over there for more than 90 days. Okay? Surviving unmarried spouse, no time requirement, or if they remarry after the age of 57. Spouse of a prisoner of war or missing in action, spouse of active duty member after 90 days missing.
Okay, so the next to the last one you said.
This one?
Surviving unmarried spouse.
Surviving unmarried spouse, no time requirement. But I think, I think the caveat to that is they had to have passed away because of a military-related incident. I believe that's the case. They couldn't have just passed away from old age. And then they get to use their spouse's military benefits. Proof of service needed to get from the veteran. And we do this for you. I'm just trying to give you some behind the curtain information to educate yourself so you know what to look for. So if they're actually in the military now, we need their statement of service. It's kind of like their pay stub. Okay? If they're in the reserves or guard, it's a form NGB form 22. And if they're they're no longer in the military, it's called the DD 214. This is the one that we use probably 90% of the time. Mainly because there's no active base in this area other than down in Homestead, right? Okay, so this is an example of a DD 214. Down here in the corner, and I highlighted it, but it darkened it up so you can't see it, but that says DD 214. And what we're looking for up here in this section, you can't see it, but it says honorable. That's what we're looking for. All right, so if they have a dishonorable discharge, they don't have benefits, okay? If they screw Uncle Sam screws them back. All right, so you see in this section here, this is all of the military-related things that this guy did over his career. He was in the National Defense Service Medal. He got some other medals here, Accommodation Medal, Presidential Unit Citation, Vietnam Service Medal, all these things that he did. So I have seen, I did a loan for a guy that was a spy, okay? A legitimate spy. He worked at the embassy somewhere overseas. I think it was in Germany, okay? And his wife was a secretary at the same embassy. But she would never tell me exactly what her husband did. What would she say? Attaché. He's an embassy attaché. You know, what's that mean? She goes, you'll figure it out. That's all she would tell me. And then she got me his information, and this thing was full of stuff that this guy had done. He was like a Navy SEAL and all this crazy stuff, right? All right, so as Willy Wonka says, it's all about the golden ticket. The golden ticket on a VA loan is what we call the Certificate of Eligibility. I know you can't see this, but right there, Certificate of Eligibility, COE. This is the form that once we get the DD 214, my processors send that to the VA. They do their thing, and then they send us back this Certificate of Eligibility that says that the guy actually qualifies for the loan, or he qualifies for the benefits of getting the loan. See right there, it says exempt, where it says funding fee. This guy was in the Marines. And down here, I've got highlighted subsequent use funding fee. So when somebody goes and they get a VA loan, there is a funding fee that they have to pay to the government. And it's equal to a percentage of the loan amount. And it just changed in January. And it bumped up a little bit, but the old number was, on your initial loan, it was like 2.2% of the loan amount. And it was financed into the deal. And then at the time of funding, that money went to the VA. And then if it was a subsequent use, in other words, they've already had a VA loan, then on a subsequent use, the number went up to like 3.15% of the loan amount. But if you are in the military and you have some type of disability, more than 10%, they waive the funding fee. All right. And I'd say half of the veterans are more than 10% disabled. So a lot of the people that we're doing VA loans for don't even pay that funding fee. All right. But in this particular case, the veteran must pay subsequent blah, 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 because he's had a prior loan. But down here in the small print, it basically said that this guy was more than 10% disabled because of some military related issue. So he doesn't have to pay that. And up here, it says under funding fee, it would normally have a dollar amount, but it says exempt. It's exempt because he's more than 10% disabled. Okay. Misconceptions about VA financing. Eligibility for VA financing means guaranteed qualifications for the loan, even with bad credit. That would be a big negative. The VA will insure the loan, but they don't make it. Individual lenders like us are the ones that actually approve and give the money away, but we're not going to do that to somebody that we don't think is credit worthy. So the VA is basically a financing or an insurance company, same as like FHA. FHA is the insurer of the loan, but they don't make the decision. A bad credit report doesn't matter because the VA guarantees 100% of the loan if the borrower defaults on the payments. That's another no-no. We do care about what the credit looks like. A pre-approval isn't needed when the buyer plans to use VA financing. That's false. Also, anybody that gets any type of loan, whether it's VA, FHA, or conventional, we have to get them pre-approved. VA financing can only be used once. Veteran who has a VA loan in the past may still have remaining entitlement to use for another VA loan. Selling the property and paying off the loan restores entitlement. This is correct. You can use a VA benefit more than once, but they typically have to pay off the old one first before they're going to get a new one. And the reason for that is they don't make second homes, vacation loans, or investment loans. Okay? So who makes the loan? Does the VA make the loan or does the lender make the loan? Lender, very good. The answer, lender. Ultimately, the lender makes the loan, not the VA. Regardless of the VA's guidelines, the borrower must meet the lender's standard for credit worthiness, and the lender decides whether to approve or deny. Okay, what type of properties can they buy? Single-family residences, condos, townhouses, mobile homes, and up to 4 units. So here's the nice thing about condos. You know how hard it is for us to do condos for a normal person. FHA in our county, I just checked it this week for a realtor. There are 11 approved FHA condos in Broward County. There's 9 in Miami, and there's 11 or 12 in Palm Beach. There are 247 VA approved condos. And if they're not approved, it's pretty easy for us to get the condo approved. We got one done in a week. Okay? So if you do have a veteran and they want to buy a condo, it's going to be a lot easier than it would be on any other type of loan that we do. All right?
Is it still 100% financing?
Yes. Mm-hmm. Mm-hmm.
Question on the association does require 20% down payment, then that.
Yeah, then you can't get around that. That's a self-imposed rule. Okay. And this was an example of that I talked about earlier. So a veteran was going to buy an $800,000 piece of property. He was going to live in one of the units and rent the other 3 out. The expected rent was $2,000 per month. The underwriter will adjust the income on the rentals to 75% of that. So $6,000, 75% of that, it was $4,500. So he got credit for $4,500 in income from renting out the other 3 units. His new principal interest payment, taxes and insurance, was $5,875. So with AMP and our relaxed guidelines of being able to go to 60%, he only had to show making $64,000 to qualify for an $800,000 piece of property. That is crazy. Okay, can the loan officer contact the appraiser on most loans? The answer is no. If I talk to an appraiser, I typically lose my license that same day. However, on a VA loan, they let me talk to the appraiser. Those nuts. Can you believe those crazy people? I can on an FHA deal. I cannot on a conventional, but on a VA loan I can. Funding fee. And like I mentioned, this was adjusted in January up a little bit on both these numbers, but just so I basically want you to know that there is a funding fee, and it's going to be, I think this one was bumped up to maybe 2.25, and this one was bumped up to 3.45, I believe was the number, but I'll double check. And when I send you guys out, if you email me and you want a copy of the presentation, first of all, I'll send you the one from Florida, and I'll make sure that those numbers are updated for you, okay? In conclusion, the short version, okay? We want to market to our veterans. We want to thank the veteran, right? We want to know the VA financing basics. Somebody tell me one VA financing basic. Joseph. Huh? 0% down. That's number one. What's number two? Huh? 2 million. Up to 2 million. Okay. Joseph, give me one more fun fact.
4 units, condo, single family.
Good. All right, young lady. What's the easy one? Has to be primary residence. Give me one more. Is there mortgage insurance?
No, there's no mortgage.
No mortgage insurance. Has to be owner occupied. Correct. All right. Educate the veteran that owning is cheaper than renting. I mean, we want to do that with everybody, but especially our veterans. And remember, veterans don't get educated on their benefits. All right, so it's up to you to educate them on how good this product is for them and how easy it is to get into it. We want to connect the veteran with AMP. AMP is going to get the paperwork from the veteran. We're going to get the DD-214 from the actual military person. Then we're going to send that in to the VA and get the certificate of eligibility back. And then we're going to issue the pre-approval. And then your job is just to find them the house. You guys have the easy part. Right? Yes, ma'am.
How long does it take normally to get the pre-approval?
The question is, how long does it take to get the pre-approval? And the answer is, normally it's the same day or no later than the next day. Our pre-approval process is pretty simple and straightforward on all of our products. Typically, it starts out with a welcome call and an initial introduction. And the people on my staff have been trained to, in the first part of the conversation, to build you up in the eyes of the client. So, for example, Jocelyn, you got a deal closing tomorrow, right? Okay, so she's got a deal closing with us tomorrow. On the initial call to her client, my staff would make the call and go, hey, listen, you really got hooked up with a great agent. She really knows the market, she knows the area, and she's a great negotiator. I can tell you that she's a great negotiator because she's already put a gun to my head and told me that I'm paying for your appraisal, saving you $600. So when we present that to the buyer, it's not, we're not pounding our own chest saying, hey, you want to do business with America's Mortgage Professionals because we're going to pay for the appraisal. Instead, we flip it around and we use it to elevate you into the eyes of the client so that you're going to get more referrals. Because the reality of it is, these people are only using you for 2 skill sets, and that's it. And if you don't possess them, they don't need you. It's the truth, right? They want somebody that can negotiate, and they want somebody that can show them the market. And if you can't do those 2 things, they don't have any use for you. So you have to sell them on the fact that you have those skills, and we're going to help you do that. Okay? But our pre-approval process, to get back to that, Mr. Customer, we're going to take your application. We're going to pull your credit report. We do pull a tri-merge credit report that has Equifax, Experian, and Equifax, Experian, and TransUnion. By underwriting guideline, we have to use the middle of those 3 scores. We are also an approved lender with HUD, and we have access to the HUD's government underwriting system. It's an automated underwriting system. And we download your application and your credit report to that system, and it comes back and it spits out an approval on your loan request. But we're going to take it one step further. That's where most lenders stop. what we do at America's Mortgage Professionals, we do a little bit more work on the front end so that we can get your loan closed sooner on the back end. So we're going to go ahead and verify your income and your assets. So we're going to look at pay stubs and tax returns and W-2s. We're going to look at your bank statement to make sure you have the money to cover the closing costs. If Granny is giving you a gift, we're going to send a gift letter to Granny and make her sign it and send it back to us. Because we've had on occasions, not very often, but on occasions, somebody said, yeah, Granny's giving me $10,000 to buy the house. We did all this work on the deal. And then Granny said, well, little Johnny never told me I was giving him $10,000. And everybody did all this work for nothing because Granny said she wasn't giving him the money. Apparently, little Johnny didn't mow her lawn when he was a little kid. Okay? Yeah. So the reason we like to look at the pay stubs up front is because there are stuff on the pay stubs that don't show up on the credit report. Garnishments, payroll deducted things from like a credit union. A lot of credit unions don't report to the credit bureau. So we want to look at that stuff. Also, people that are self-employed, we want to dig through their taxes. There's certain things that we can add back in as income. And we've had a lot of people that say, yeah, I make $100,000, and then we get the tax returns and they grossed $100,000, but then after they wrote off everything, they only actually made 60, and then they didn't qualify. So we don't want our realtor partners out driving people around to 30 different houses, showing them all these properties, and then we do this kind of work after you turn in the purchase contract and we find out that there was a garnishment or something payroll deducted or something that didn't show up on the credit report. And the deal goes to being turned down and you're mad. You know, nobody wants to mess with that. All right, any other questions? Because we are wrapped up. Anybody online have any questions? Okay.
I have one more question.
Last question, here we go.
On the VA loan.
Yeah.
What, I think it said that they do manufacture
Yes, mobile homes.
mobile homes.
Mobile
So-
and modular.
Okay, so what is the minimum loan that,
We don't like to go below 100,000.
okay.
We will on occasion maybe go down to like 75 or 80, but when it drops below 100, we pay for the appraisal on just about all your deals. But when it drops below 100,000, our margins are so thin that we don't pay for appraisals on deals below 100,000. And we actually lose money if the loan's below 75. We typically are making 2% on a deal. All right. And by the time they pay the loan officer, the processor, pay $600 for the appraisal, there's nothing left. You know what I mean? So, you know, on a $100,000 deal, we're making $2,000, but our expenses on that deal are probably close to $1,500–1,600. So that's kind of our minimum. But we have on occasion dipped into the realm below the 100,000, mainly as a courtesy for people that do business with us. Oh yeah, Joe's aunt wants a house or a little tiny condo and Joe's closed 10 loans with us. So yeah, as a courtesy to Joe, we'll do it. All right. And that's typically the times that we do that sort of stuff. All right. All right. What time is it? It's Foundry time. So let's go down and have an adult beverage. Who's in? Joe, you in? All right, let's go. Let me shut this computer off and then we can get out of here, guys.